Hey guys, welcome back. I don't even know how to start this video because what we saw today was frankly stunning. If you've been part of my community or if you've been following the research that we do here on Market Signal, you know I've maintained an unshakable long-term bullish view on this memory supercycle. Frankly, I've been thinking for a while and saying that this entire sector needs to be re-rated based on the fundamentals and the demand in the marketplace. But what we witnessed today was absolutely jaw-dropping. A single day vertical move of this magnitude is stunning to see, not only with Micron, but all of the members of the memory cycle, the memory titans of the Fab 4. They put on a stunning performance overall. Let's jump into the tape and look exactly how they closed the day overall. So we got to start with Micron because it had the most massive move today. $145 almost of share gain in one single session, almost a 20% growth for the stock. It closed at $895.88. I was talking yesterday that we would break 800, maybe start to push towards the 818 52-week high at some point this week. I had no idea. I didn't anticipate this at all. This was a monster move for the stock today. If you look in the after hours, it is still surging. It's $59 up right now, almost another 7% on the board. It's trading right now close to $9.55 a share, way beyond the 52-week level. You can see the intraday high today was about $9.17 for Micron. So we are pushing towards the $1,000 price target that we have seen. We've seen a number of analysts go $1,000, $1,100. We had a new price target that hit this morning that was a massive catalyst for the sector overall. I'm going to get to that in a moment. But let's take a look at how the other members of the Fab 4, how they traded today. If we jumped over to SanDisk, SanDisk had a very strong day, a 7.5% gain, almost $111 share gain on the day. It closed at $15.90. As you remember, if I mentioned, I just said that SanDisk was perfectly coiled. It was getting ready for the next leg up. We had a chance to break 1,600 this week, I felt. We broke through it today, got to 1641, almost 1642 a share. And the after hours right now, you can see over another 3%, another $51 onto the share price right here, trading right now at 1641. So we have passed through 1,600. Both Micron and SanDisk, frankly, all of them, they're in blue sky territory right now. They are moving ahead based on the demand that we see in the marketplace. Let's see what the Storage Kings did. They had a great day today too. Western Digital, it's been a lagger. You know that for a while. It was lagging behind the others. Not today. It was the second highest grower today on a percentage basis. You can see almost 8.5% growth, $40 per share. Closed at almost $5.25, and in the after hours, it has another $9 on top. It's trading right now about $5.34, close to what we saw today. Intraday high over here, you could see, was $5.36.12. And finally, Seagate. Seagate was the slowest. It was the lowest grower, but a 4% gain for the day. I'll take it with any stock. And it was up almost $33 a share. Closing at about $8.46 a share in the after hours, another $8 on top, $8.54. You can see where it got over here in the intraday high of $8.62.65. So these stocks are in a bull run right now. They are all moving very strongly. There don't seem to be any pullback in the after hours right now. All of the gains today, it feels like the retail and the whales, they are very satisfied and they want to push these stocks even further. Could we see another strong day across the sector tomorrow? But guys, a massive announcement. Let me pull this up. You can see Micron now hits the $1 trillion club. We talked about it a week or 2 weeks ago, how this stock was tracking towards the $1 trillion level. They're only the 10th company, the 10th U.S. company to hit the $1 trillion mark. I think there's only 13 in the club altogether. So it's great to see Micron in that club overall. It truly demonstrates and kind of speaks to the demand for this company in the market, the demand for their products and what they're doing to meet that demand, delivering these differentiated products in the market. So congratulations to Micron. Outstanding day across the board. This was a huge move for the sector over. Today, we're going to bypass the typical media commentary that's out there right now that may be talking about Micron or the memory sector overall. And instead, we're going to do a deep dive into the tape and what actually drove today's breakout. We'll look at the fundamental catalysts that helped drive this explosive growth for the sector today. I'm going to break down the intraday action, and I'm going to back it up with literal hard proof from the institutional block trade tape. So let's get into the video. Let's talk about the stories. Let's take a look at performance across the board. But if you haven't done it yet, make sure you hit like, make sure you hit subscribe to the channel. Guys, I'm working hard each and every day for all of you. We're almost close to 18,000. Let's see if we can pass that 18,000 subscribers this month and keep growing the channel. I don't think we'll have the growth that Micron had today, but let's keep growing in a positive fashion moving forward. Let's jump in and talk about the first kind of story, the fundamental story overall that I think kind of reset the entire mindset for the sector. Because for my opinion, guys, today, ultimately, the death of the long-standing Wall Street assumption is over. For decades, we know the financial media and the big banks have treated the memory sector as a commodity-driven boom-bust cycle, just a cyclical companies overall. But today, after what we saw, the market was forced to price in a completely new structural reality for this sector and for Micron in particular. And there was a couple massive specific catalysts that drove the historic capital wave across this sector today. The first one happened kind of right at the bell, or the opening bell, and it was the morning spark that came in from UBS and from their analyst, Timothy Arcuria. I hope I'm saying that right. He issued a massive blockbuster research note that completely blindsided the bears. UBS just didn't tweak their price target, though. They more than tripled their 12-month price target on Micron. Let me show you that. Let's jump in to show you exactly what they said, or what he said, and the reasons why. So let me pull up the note here that we saw in Morningstar, and we'll jump through it together. But you can see Morningstar here, the Micron stock reaches a major milestone as UBS slaps on a out-of-sight price target. But if I scroll here, you can see that the analyst tripled his price target for Micron from $535 to $1625, with the new target representing an upside of 81% from closing price on Tuesday. That makes Arcuria by far the most bullish analyst on Micron stock, because we know we've seen other analysts that have placed a $1,000 price target and multiple $1,100 price targets on this stock as well. But now it's $16.25. He by far is the highest, and it's based on a couple things. One, he went on to say that his price target is based, you can see here, based on a 15x price to earnings multiple on a 12-month basis. He added that he sees no reason why Micron should trade a whole lot differently than NVIDIA with regards to price to earnings. And NVIDIA trades at a PE ratio of 21.4x. He went also to say that new customer agreements for Micron likely span between 3 to 5 years, with some years under fixed terms and others up to variable pricing. And he mentioned that DDR memory volumes, 30% of DDR memory volumes across the industry will be locked in at pricing just slightly below current levels. And we know the massive pricing power that these companies have right now. So to see that they're going to have that pricing power locked in for years ahead is a strong bullish sign. And the other things that he said, Curia said, Micron's earnings per share will maintain above 100 through the year of 2029. So not just 27, but 28 and 29. And in that time frame, Micron will generate more than $400 billion in free cash flow for the company. So when that hit this morning, that was kind of just a massive bullish segment overall. The long-term agreements, the 30%, DDR volumes being locked up by hyperscalers right now, the earnings per share of over 100 through 2029, the $400 billion in cumulative free cash flow, and all of that came together. It was a massive bullish signal overall, because when a top-tier analyst, when a company like UBS and a top-tier analyst argues that Micron deserves a normal tech multiple rather than a cyclical discount, portfolio managers are mechanically forced to reallocate capital instantly to Micron. And I think there was a second driver in that article that I also have to pull up, because it was another kind of bullish sign for the sector, but it was all related to DRAM. If I pull it up here, Arcuria mentioned that dynamic random access memory will be undersupplied through at least the second quarter of 2028. And NAND memory will be undersupplied until the fourth quarter of 2027. So we have known for a while that this demand was going to stretch out. I think there were some of us were concerned for DRAM. We were going to see the back end of 27, but now they're saying at least the second quarter of calendar year 2028. So that was a major driver as well. I mean, it just shifted the projected supply and demand metrics that are in the market right now. So when you see it go out to 2028 for DRAM and the fourth quarter for 2027 for NAND, this kind of multi-year supply bottleneck, it directly explained not only the movement we saw with Micron, but it explained the sympathy runs that we saw with SanDisk, was up over 7.5%, Western Digital, which was up over 8% today, and Seagate over 4%. If the broader market is locked into multi-year deficits for both advanced memory and storage, enterprise contract pricing power remains firmly in the hands of the memory manufacturers. But we've got to look under the surface, under the charts today, because in my opinion, what we saw with Micron wasn't just retail enthusiasm. It was a mechanical, multi-billion-dollar institutional stampede today. And there are three under-the-radar mechanical drivers that made today's sector breakout completely unstoppable for Micron. The first one is kind of the passive indexing. We know that Micron's weight in the NASDAQ composite and the S&P 500 has scaled so rapidly recently. So any fund tracking those benchmarks was caught severely underweight at today's opening bell. And because its index weight has grown so fast, passive index funds, target date funds, and mega ETFs were physically forced to buy billions of dollars in shares at any price just to rebalance their portfolio and maintain the correct index tracking weight. And if you want evidence of that move today, you want evidence that it wasn't just purely retail enthusiasm, let's pull up the tape. Let's take a look at the stock block trades that we saw. So let me pull up the Market Chameleon data and we can walk through that together. So you guys know Market Chameleon, I'm looking at stock trades. I have it filtered for Micron. I also have it filtered for any value over 10 million here in this kind of turquoise column, just to make it easier for us to see overall. But you can see right at the closing cross, right here, right at 4 o'clock, we had a $3.6 billion trade that crossed the finish line right at the close for over 4 million shares at the target trade price of $895.88. So the closing price overall. And while we can't, none of us can purely know the intent of every participant or every block trade, flows of this size, in my opinion, are consistent with institutional rebalancing and large-scale positioning, large-scale positioning activity. This can easily be interpreted as passive index funds mechanically forced to execute a market-on-close order to reweight their portfolios for Micron's new trillion-dollar status. But the institutional story for Micron, it goes even deeper on the tape, beyond the closing cross. Because if you look at what happened after that closing cross, just seconds after, we could see massive block trades, kind of block after block. We see one at 16 seconds later for 54 million, 25 seconds later for 18 million, 26 seconds later for 37 million, and another 25 million. So block after block for Micron, all at that 895.88 level overall. And you can see in the far right column, if you looked at exchange column, it's in the dark pool. And the condition is after hours prior reference price. So these are institutional whales that spent the first 30 seconds of the after hour session vacuuming up hundreds of millions of dollars in shares behind the scenes at the prior closing reference price. They didn't want to alert the public order book during the day and drive the price up even further. So they finalized massive buy allocations in the dark pools. The big money isn't taking profit here, though. They are locking up these shares in deep storage and holding them in their funds. And I think there was a piece in that article that I want to pull up that we talked about UBS that was a massive signal as well. And most didn't, they just missed it. I think most of the headline was based around the price target overall. But if I jump over here, you can see, if you look at investing.com, the piece that I want to call out is the fact that they also have raised the assumption for Micron's HBM average selling price per gigabyte, now modeling a 50% year-over-year increase compared to its prior 35% estimate from UBS. So that is a huge sign. And when you see a company that raises that assumption at that level, I mean, this was a true bombshell item that was hidden deep in this research note. If Micron's HBM average selling price per gigabyte is up to a 50% year-over-year increase, in traditional hardware cycles, tech prices, they typically decay by 10 to 15% annually over time as supply increases. An asset class pricing model shifting from a structural decline or decay like we see to a vertical 50% increase is practically unprecedented in computing history. It proves that the memory shortage is actually intensifying, completely locking in premium margins for any investor holding advanced flash or DRAM allocations. And guys, the last thing I want to do is just take a look a bit of the gamma squeeze that happened this afternoon. Because if I pull up this 5-minute candle chart, I want to walk you through three kind of signals, in my opinion, that show we had a bit of a kind of an options-driven gamma squeeze with Micron this afternoon. First, look at the price action from midday all the way until that final 30 minutes of trading hour. So right about here, all the way to here. I want you to just focus on that because that's the piece I want to talk a little bit about. Because in a normal retail-driven momentum rally, a stock moves up in waves. It spikes, hits a minor overhead supply level, and then pulls back to retest support as short-term traders take profits. But if you look at the chart here, there are virtually no clean pullbacks during the entire afternoon. It is a straight, relentless, diagonal grind upward for Micron. This happens because the stock price continuously rose and breached new call option strike prices. Automated risk algorithms, they forced option market makers to programmatically buy billions of underlying physical shares to remain market neutral. They weren't waiting for a dip. They were forced to buy the stock at any price. And second, if you look down below at the RSI, you can see that bottom indicator down there showing a 14-day RSI. Notice during that massive afternoon run that I just called out, the RSI level climbed up and held an incredibly high shelf without immediately collapsing at all. In an emotional retail hype pump, the RSI spikes vertically and instantly crashes because the buying pressure is exhausted. When you see an RSI maintain a flat, elevated shelf with the price, while the price keeps creeping up, it visually confirms that a mechanical structural buyer is entirely dominating the tape and absorbing every single incoming sell volume. And then the last piece I want you to look at on this chart is the volume profile distribution across the middle of the day. Now, we know the largest volume, if you look to the far left, it's the opening cross, the opening bell. It represents that initial short covering and reaction, probably reaction to the UBS note that we saw this morning. But the subsequent afternoon advance, it happened on remarkable, steady, uniform volume bars. This highly consistent volume profile proves that the afternoon run wasn't driven by erratic bursts of emotional retail trading. Instead, it shows a systematic algorithm buying program matching incoming options flows step for step, acting as a relentless escalator to the upside all the way into the closing bell. So guys, we have to ask ourselves the critical question as investors right now is like, what do we do? How do we tactfully play this explosive breakout tomorrow? Do we take profits and run, or do we hold for the next leg up? In my opinion, I'll lay it out very clearly for you. I think if you're a short-term swing trader or an option scalper utilizing short-dated calls, yes, taking profits on a 19% vertical extension is a fundamentally sound risk management play. Never apologize for booking gains when a chart goes completely parabolic. However, if you are a core long-term structural investor like myself, building a position in the AI infrastructure stack, selling your core position right here is a massive mistake, in my opinion. This breakout represents a fundamental shift in institutional valuation. If you sell your entire block out of fear for a minor pullback, you are getting completely left behind as the sector chases its true long-term valuation targets. That said, I think we should expect to see a minor healthy period of profit taking and intraday pullback tomorrow. It doesn't look that way in the after hours right now because all of the stocks are on fire and continuing to accumulate. But if we happen to see a red candle tomorrow, I don't think we'll see it at the opening, but if we do see profit taking that puts some pressure on the stock and we see it start to pull back, do not panic at all. It is a healthy technical reset. If we see Micron pull back a bit, maybe even down as far as the 890 level, I don't think it'll come back that far. I think we're actually moving towards the 1,000 mark with this stock. But if it does, it is a healthy market structure reset. It allows the short-term moving averages to catch up to the price action and flush out the weak momentum chasers, building a sturdier foundation for the rest of the week. But bottom line, guys, for me today, I think it's clear. The big money has officially spoken. The JP Morgan, the noise versus the signals that we talked about yesterday, that conference shakeout was a gift for all of us that understood the tape. And today's price action proves that the hardware supercycle is accelerating at a rate that the mainstream media just cannot comprehend. Let me know in the comments below. Did you book profits today on that massive 19% run for Micron? Or are you holding your core position until we get to that journey or we hit past the 1,000 mark for the stock? So make sure you manage your risks respectively. Make sure you manage it that's aligned to your individual tolerance level. Always trust and listen to the true signals in the market. And guys, I will see you after tomorrow's market close. But in the meantime, let's enjoy this one today. It was an awesome day for the sector. Take care, guys.